One thing the coronavirus outbreak taught us was that certain things happen entirely unexpectedly. The pandemic not only necessitated further digitization of the real estate market, but it also generated a trend that spread mostly through social media. Non-fungible tokens flooded the feeds of tens of thousands of users overnight, giving digital art some of the personality and originality of analog art. Today we'll be talking about everything that correlates between NFTs and real estate, so stay tuned. So what's the hype all about? NFTs have been on everybody's mind recently, most commonly in connection with financial interest in the art world, but increasingly also in real estate. How many people would have predicted that the blockchain-based movement would make its way into the slow-moving real estate market? Not much. The auction of Canadian designer Krista Kim's simulated Mars house, which went for $500,000 on a NFT platform, demonstrates that the concept has evolved from a game to a legitimate business. Let's take a look at the NFT boom. The rising price of Bitcoin, the impact of the pandemic, and skepticism of the US currency produced a perfect storm for NFTs. Since the outbreak of the epidemic, more people have begun to save money. In 2020, 59% of individuals earning more than $100,000 increased their savings considerably. NFTs would be another method for people to invest now that confidence in the US currency appears to be at an all-time low. The pandemic has undoubtedly led to the NFT boom, but that's also an unavoidable byproduct of the tech boom that younger people would have pushed regardless. Multi-million-dollar purchases by 3LAU and Grimes have captivated the attention and prompted a gold rush for many artists, especially in the music industry, but the motive for buyers is less obvious. Will NFTs keep their value? NFTs, according to investor and VaynerMedia CEO Gary Vaynerchuk, are in a bubble, but that doesn't mean they won't last. In actuality, the internet was a game-changing technological innovation, but many of the early initiatives were just overpriced due to the hype. Right now, the housing market is so hot that even digital homes are selling for ridiculously high prices. 9 Genesis plots of virtual property were just auctioned for $1.5 million. While this transaction was made using an NFT, it has little meaning for anyone looking for an actual home. NFTs are slowly but steadily infiltrating the physical real estate market. 221 Dryden Street, Thousand Oaks, California was placed for sale as an NFT with bidding starting at $117,000. The listing was expected to be a turning point in NFTs history. The house is now being listed the old-fashioned way, since homebuyers with little experience working with NFTs are unwilling to make a move on the investment. But don't worry, we're here to help you understand everything. Real estate NFTs. Traditional financing, reams of paperwork, and in-person closings may become a thing of the past in the real estate sector, but not anytime soon. Before you may expect to be able to acquire a physical property as an NFT using DeFi systems, which are decentralized financial systems that don't rely on banks or credit unions for funding, but there are some obstacles to overcome. Real estate NFTs have the potential to revolutionize the way we buy property forever. The way physical property is funded, bought, and traded will surely alter as a result of NFTs. It's unlikely to impact the way you look for and select your ideal home. Some say that NFTs will put realtors out of business, but it's more probable that they will modify the way they do business rather than putting them out of business completely. You'll still want to see the home you want to buy, learn about the community you're purchasing in, and have a clear grasp on the property's value, whether it's in dollars or Bitcoin. If NFTs become more widely used in the actual real estate industry, realtors will gain a better understanding of how they work and how they apply to your individual scenario. As a result, rather than losing all brokers, you'll most likely see realtors who specialize in these types of deals. Real estate NFT platforms. The capacity to buy and sell land or real estate via platforms like Decentraland and CryptoVoxels demonstrates that demand for digital real estate exists. The owners of digital homes allow their properties to be overpriced. In certain circumstances, the prices are identical to those of real estate. In this form, digital homes and properties are still a combination of art and real estate, but they're raising NFT awareness in the real estate market. This is because, in addition to this unique type of real estate investment, the advantages of tokens and blockchainization are becoming increasingly popular in the real world. The tokenization of real estate. The tokenization of real estate is similar to the digitization of offline artwork in that the token reflects the asset's ownership information, which is stored on a blockchain. All facts, including ownership, development plans, location, and the investor's rights, are mapped in digital form and documented in a smart contract as part of the process. Property's worth is then divided into a set number of tokens and handed to investors. These can be posted on a digital exchange for secondary market trading and simply resold by investors after the initial issue. The tokenization of real estate has a significant benefit. The world's most volatile asset class is now available to a wide range of investors. Once again, technology democratizes an exclusive process, allowing previously elite asset classes to participate. How is this possible? Transaction fees are quite minimal in this setting compared to traditional real estate funds. Blockchain technology prevents unlawful activities such as tax evasion and money laundering in real estate transactions that are previously murky. This is due to the technology's advanced functionality. The blockchain is secure against falsification due to the structure and connection of the individual links in the chain. Black Manta Capital Partners is the pioneer of blockchain-based tokenization. In partnership with Tigris Immobilien, it successfully completed a RETO, real estate token offering, for Berlin real estate worth more than $12 million in 2020. Private and institutional investors from Germany and Austria were able to invest as little as 500 euros in a Berlin flat in a prime location. This form of investment has a significant benefit because in the context of the Berlin RETO, investors will receive a 20% share of the sales profit when the project is completed in 2022. Buying real-world properties as NFTs works for people as well as for crowdfunding, as demonstrated by TechCrunch founder Michael Arrington's example. The latter sold his Kyiv apartment for $20,000 at an auction. Propy, a blockchain-based real estate brokerage platform, helped him complete the sale. NFT challenges. At the same time, one of the blockchain's benefits can become a major hurdle as well. Due to its immunity to counterfeiting, the blockchain can be considered burglar-proof, and lost keys to crypto accounts have proven impossible to decrypt thus far. But there's still a possibility. Lack of laws, security hacks, and forgotten credentials. However, NFTs pose significant obstacles to the current real estate business, which may delay their adoption for some time. The security of crypto tokens is one of the major issues. These digital tokens are vulnerable to security breaches. There's also the minor matter of what happens if you forget or misplace your password. At the moment, losing your cryptographic keys means losing your Bitcoin for good. This means if you lose money in the cryptocurrency world, unclaimed property rights in the NFT and actual real estate worlds will be lost as well. Another issue is the lack of restrictions that apply to this form of real estate transaction. At the moment, there are no regulations or tax standards dictating how these transactions should take place. Environmentally unfriendly. The fact that cryptocurrency has a negative environmental impact is corroborated by calculations from the University of Cambridge. Bitcoin mining consumes more electricity per year than all of the Netherlands, according to the Cambridge Bitcoin Electricity Consumption Index. While the obstacles outlined are significant, the prospects for NFTs in the real estate business should not be overlooked, since this is the industry of the future, and it simply requires more time to develop and become a safer environment for all. NFTs are sweeping the digital world, but they're also taking longer to make their way into the actual world of real estate sales. Maybe some time before the ordinary homebuyer feels comfortable paying in digital currency for the largest purchase of their lives. Now in other finance news, as the stock market recovers, Bitcoin prices rise. Bitcoin and other cryptocurrencies rose on Tuesday, matching equities oppositely that had fallen on Monday due to Omicron pessimism and concerns about the global economy. Bitcoin was up 6.26% to $48,896. Ethereum was up 5.97% to $4,026.36, and Dogecoin was up 3.97% to 17 cents. Marathon Digital and Riot Blockchain, both crypto crypto-related equities gained 6.9% and 6% correspondingly. As market sentiments absorb the newest Omicron developments and their influence on global economies, stock futures indicate a stronger open on Wall Street. Traders' risk appetite has shifted, however, as evidenced by speculative assets. Cryptocurrencies have been reacting to growth trends in the same way that commodity futures and technology stocks do. Goldman Sachs decreased its first quarter GDP growth projection to 2% from 3% on Monday and lowered its outlook for coming quarters. Bitcoin will someday replace the U.S. currency, according to Jack Dorsey, the founder of social media platform Twitter and a crypto enthusiast. Thanks for sticking around till the end of the video. If you like watching our content, please leave a like, share, and subscribe to our channel.